Andrew, I have to begin by getting your thoughts on the pressures. What really, in your view, is really causing the market to slide so, if you like, aggressively over the last few sessions? Would you say this is a story around the declining oil price, or is there more at play here?
Okay, Wally, it's a pleasure being here again. I think generally that, of course, the euphoria that greeted the market in the month of January has essentially abated, given the fact that we've continued to see some decline on virtually all the counters. And we cannot totally exclude, the factors you mentioned, excuse me. But the fact remains that there was much more anticipation coming into 2020. We thought actually that indeed, because we've began incursion into the earnings season, people were buying, fairly underpriced stocks at the level that they were in January, starting the first week. But where we are now kind of takes us back to, the very beginning of the year. I do think also that the waiting anticipatory move or rather by investors on the heels of the earnings reports is beginning to wane. So we haven't had all the reports, but some are already trickling in. A few, of them not quite satisfactory, I think, in the minds of some investors. But we cannot also, rule out the possibility that the fixed income market space has gotten some level of traction, given the fact that the central bank moderated the CRL, a few days ago. So
right,
by and large, there is a balance in effect on the market.
Yes, but Andrew, I didn't hear you mention the oil price at all. Don't you think that's a factor as well?
Yeah, it is a factor, obviously, because it's going to tell a lot more on the expectations around foreign exchange pricing, given the fact that if price begins to tumble, like we saw a few days ago, even though today seems to have abated a bit, we think that that's going to affect the level of foreign reserves, and that might put some pressure in terms of pricing of foreign exchange. So to that extent, it could also have some moderation, in the equity space.
All right, so all that said, how are you approaching the market right now? Because while we're seeing some, if you like, interim results, we haven't seen the audited accounts yet and the dividend payments, which many have pointed to as the big attraction in the first quarter. So given all that said, what's your expectation and which stocks do you like?
Yeah, my text certainly will still stay with the banks. One, because I see banks, to be very resilient, right, regardless of the vagaries of weather in the economic space. They have the ability to, weather every form of pressure that is exerted upon them. So in terms of earnings, I think a few of them are already posting positive numbers. So yes, they may not be audited, but they are certainly pointing upwards. And by and large, I think that most of them will be able to maintain the level of dividend yield that we're accustomed to. So Access, Zenith, UBA, Guarantee, I think will virtually, play back in the same mold we had last year. I don't expect anything less. Probably some marginal improvements across counters.
Okay, Andrew, we have to end it there. Thank you so much for your thoughts. Andrew Tsaku, a trader at Kapital Care Trust.